Hey guys, Carlos Cortez here with another episode of Scriptures on Wall Street. I figure I killed two birds with one stone today doing my midweek starting out in the car. As you guys know, I take my son to school, which is about an hour away to and from. So I'm in the car 4 hours a day. Thankfully, I can still work just talking on the phone, right? Um, However, I'm just grateful that I can have a platform that I can help many, many of you guys that need advice during these weird times. And I'm talking about times that we've never seen as a country before. These are different times here. Speaking of different times, yes, we've had over 17 recessions in the history of the United States. But any of those recessions, we haven't had the yield curve where it's at now. And we definitely didn't have artificial intelligence. So things are a lot different. And I'll say this boldly, in my opinion, in 3 years, we got 3 years till the robots take over. And I know that sounds funny, but the humanoids that are going to be doing human functions will be coming within 3 years. They're already here, but they will be cleaning your home. Companies will be hiring them to mow your lawn, to paint your house, to do irrigation systems, to basically perform human jobs. And then what's going to happen on the consumer level, I think will be faster on the business front as a service. But what's going to happen is the retail consumer is going to want that to do this work inside their home, inside the house, in their home, and outside their home. So it's going to be rapid. And you can screenshot this video, you can save, you look at the date, whatever you want to do. And I'm setting it now that the AI is just completely just getting started. It is going to be everyone that has an iPhone, Samsung, laptop, electronic, all your stuff is traced and tracked. There's no safe app out there. Your data is being stored. Your behavior, your patterns, your geographical tendencies are all being tracked, traced, and controlled. And they're going to make these robots implemented with this software that knows the behaviors of humans, and it's going to be viewed as a good thing. But eventually, you guys know how that story ends. So as we get into this new world order regime, this track, trace, and control regime, you'll notice that everything is going to be digitized, tokenized. BlackRock has went out and spent billions of dollars on tokenizations. And basically, this is going to, everything in your whole life is going to be digitized. Now we have Social Security forcing people to go the digital route. We've had Vietnam. We have Vietnam basically coming out just last week. 86 million banks accounts by the state of Vietnam Bank. Like, they have their own country's bank for the people. Anyways, 86 million accounts have been seized. Failure to comply to the biometric system. Biometrics, meaning the palm markings, your retina, eyes, whatever biometrics they have, fingerprints. So they didn't comply to whatever the bank was catering to. Now, what's interesting is the banks here have that same language where they can bank bail in you. They could stop everything based on your behavior. There's behavior clauses as they seem, if they view you as a domestic terrorist, or you speak against a certain country or a certain movement, or, you don't say Charlie deserved it, you say you're for the kings. I mean, I'm for the kings, right? Rise Up Kings is what I represent. It's a great organization. If you believe in masculinity and the cross, you need to check out riseupkings.com. The founder is a really close friend of mine, Skylar Lewis. I've had him on my podcast twice already, but I'm in talks with him all the time. Anyways, it all is a masculinity issue, as you guys understand. Like, they want to dumb down the man. They want to make us fat. They want to make us lazy. They want to make us unspiritual. They don't want us to have any kings, right? But yet, there's kings in pretty much in every socialistic country. Look at Canada. You got a king and a queen, right? You have parliament. It's just crazy, man, like what this world is doing. The manipulations are so real. It's not even funny anymore. And I think I've already proved my point about the bro investors. By the time it's hit the media, you're too late to the game. And this is how a lot of investors, they invest their money once they see it in the media. The goal is to be in the know before it happens and before it goes on the media, so that you profit from being proactive. And profit doesn't necessarily mean that you're making a profit in a transaction. It could just be being okay with like staying still and not losing. Like, if you had a green money account and the market fell off and the banking sector fell off, are you okay with having the return of your money rather than a return on your money? That's a huge difference, guys. The return of your money is more important than the return on your money. And so when you go to your Sunday barbecues,
Lake Woodland.
When you go to your Sunday barbecues, you're going to hear, after church, you're going to hear, Brother Randall talk about how his Tesla stock went well, or Apple did this, and I bought, this one stock and it was up 28%, or I could have held the QQQs and I'm up 18% this year. That conversation gets so boring, but they never tell you the downside. They never tell you the downside. And when they do, they blame the economy, they blame the stock market, they blame, and they bicker and bicker and bicker. And then the true colors come out. The negative Nancy comes out. You start blaming everybody. No responsibility whatsoever. You're the one invested. You're the one that assumed the risk of red money. You're the one that did all these things. And they start blaming. Now, let me ask you something. Can you win when you're always blaming others? Can you have peace when you're always blaming others? It actually promotes a spirit of irritability, a spirit of poverty when you have that mindset. Now, I'm not saying go lose money, but the one that loses the most, the one that fails the quickest, is the most successful one, because you're either winning or you're learning. And that isn't trading, that isn't life, that isn't hockey, that is universal. You're either winning or you're learning. And a lot of times it feels like we're just learning all day, every day. Like we're back in school. I remember as a kid, we used to say, man, it'd be so cool to get paid to do homework. And that's where the entitlement comes in. That's another subject. But it's funny how that is, because it shows up in our adulthood. It shows up in retirement. It shows up in our spiritual life, that entitlement, where we just want the upside and never discomfort, never any hurt, and never any pain. And it's never our fault. We're the ones that are victim. And guess what? You never grow. You'll never grow. Your mindset is everything. Like I've said it since day one. Trading, 50% of its mindset, 40% is risk management, and 10% is the actual strategy. So this is why people don't do well with day trading or intraday trading or swing trading. They don't have the mindset, They may have the strategy, or no one's taught them the risk management side. And you know what? I'm blaming that person that taught me. He didn't teach me well. He didn't do this. He didn't do that. And your account blew up. So it goes the same thing with CDs, guys. I spoke with about 8 clients this week. I can't speak to everybody. Prospective clients, I'm sorry. People that call in from Scriptures and Wallstreet. A lot of them. Now, we've had over 50 calls this week, and it's just me and Josh giving fielding calls right now until I get my 3rd advisor on board. But what's interesting is the tone of what people are facing. Like I feel that, hey, we should just pray that God gives us that nasty anxiety away. There's no need to be anxious. Like, be anxious for nothing, his word says. And he'll hold us in his righteous palm, his righteous right hand, in the palm of his righteous right hand. Be anxious for nothing. That was actually a scripture in my son's chapel service today. So I'm saying that because I think it's important to realize as we go into the end of Q4 or rounding Q4, we're going to see some interesting things as they lower the interest rates come Tuesday, Wednesday next week. Another 0.25. They will do things that could hurt the banking index even more. And people are sleeping on this, man. They really are sleeping like crazy. So what I mean by that is the banks are so used to making money on those higher interest rates. It was very easy for them to make money on the higher interest rates. But now, since interest rates are lowered, now it's going to be very difficult for them to start bringing in the revenues that they used to. So look for them to start doing funny things. Already, there's banks that have fraud coming out, reports of fraud. There's banks that are mismanaging funds. There's banks that are associated with the auto loan industry that extended way too much leverage, way too much loans. We will see, I've said this, we will see our banking index go through a situation very similar to 2023. Remember the mini banking crisis, the bank runs in 2023? That wasn't too long ago, guys. We could see something like that very, very soon. And this is not a fear-mongering thing. This is actually what could happen. If you look at the regional index, KRE is losing its you-know-what right now. It's losing a lot of momentum. It's selling off like crazy on that 4-hour chart, the 1-hour chart, and the weekly and the daily. So that is when I start seeing the weekly and the daily, the 4-hour and the weekly going down. I saw it go down about 4 months ago. Remember, I've been talking about the regional banks, and now it's happening. Like, so there's no need to act all surprised. We've been talking about this for a minute, a huge minute. And here we are, guys. Like, it's time to get the money out of the banks. It's time to actually do something proactive. It's time to give us a call. We want to protect your principal. We want to have the ability to give you guarantees on your money utilizing insurance-based contracts. The reason why we do that is because we have access to non-securities. We have access to outside of banking laws. We have access to accounts that are privatized and insured. And these financial companies want to work with independent financial advisors that can give away contracts that you can't get at the banks. that literally can protect your principal, and you get it in writing, by the way. And yes, there's no fees and there's no risk. There is caveats. Those caveats is that you have access to 10% a year. Your account is principal protected, and if you go over 10%, you pay a surrender. And yes, the guarantees are written by a rated carrier that has been around hundreds of years and is backed by the strengths of these insurance carriers. So yes, there are insurance-based products. Some, I think, as an insurance advisor, even though I am a fiduciary investment advisor as well, a former stockbroker, um, there's two worlds that I get to play in. And so when I say the word guarantee, it's illegal for a financial advisor to say the word guarantee unless they're talking about a fixed product outside of the stock market, and it better be backed by a contract, backed by an insurance carrier of some sort. That's the only time we can use the word guarantee. So there's some terrible articles about me saying that I'm fraudulently throwing the word guarantee, which my lawyers are responding to that immediately, because I'm using the word guarantee because I can legally, because I'm acting as an insurance advisor. And I find it interesting that people want to defame me for doing the right thing and acting as an insurance advisory role when they don't even know the law themselves. So I've been doing this for 21 years now, and I love what I do. I love protecting clients' assets from the stock market, and I love showing clients what's going to happen, and it actually happens. Sorry, I'm being rude. I have gum in my mouth. Yeah, but look, the banks are going, like the regional banks. I'm talking about the PNCs, the First Trust. Oh man, there's so many I can't even think of right now. You saw Western Alliance, Zion's Bank, Bank of Ozarks. I went through that list last podcast. I don't know all 100 of them, but there's a lot of them. PNC, if I didn't say that one already. Fifth Third Bank. These are regional banks that have a commercial lending side to them, typically, and they're getting their butts kicked right now. As they lower interest rates again next week for this month, in the Fed announcement, look for more banks, more stories, more headlines. And once it hits the headlines, it's old news, man. You should have known about this a while ago. So everything on this podcast is meant for information and education purposes only. I'm not giving investment advice. But if you would like investment advice, don't forget to give us a call, 813-448-3446, or visit us at cortezwm.com, and we can schedule a time where we can give you advice. And I will be acting as an investment advisor on that end. So, yeah, what do you guys think about silver and gold? Pretty amazing, right? Run up, going up like crazy. But guess what comes down? Typically, everything that goes up must come down. And that's just the nature of the beast. I had one guy say, "You're a freaking idiot for telling people to sell their gold and sell their silver." And I'm like, you say that because you're 40 plus years old. Talk to the 75-year-old that has $1 million in gold in an IRA that he doesn't even own, and that he's trying to retire. He's trying to take 5-6% out and live off the interest. Talk to that person and see how it feels to be down 30% after his money doubled in the past 4 or 5 years. Actually tripled in the 4 or 5 years. Talk to him. Yes, we need to take some profits, not all of it, some profits out and formulate an income plan. Just because it's gold and silver doesn't necessarily mean it's guaranteed. In fact, it's further from a guaranteed. It's speculative. We're supposed to think that gold and silver go up when the dollar crashes. Well, the dollar isn't crashing, guys. It's been going up. Still to this day, the dollar is not going anywhere. They've been saying the dollar is going to go away for the past 70 years. You know, I'm actually been watching movies from when I was born in 83, like watching just movies, like independent movies. And there's even hidden messaging in these movies that talk about the end times. And they said the dollar, I mean, the same language now. The dollar's going to crash. There's going to be a one world government. They're going to do this. There's going to robots. You're going to have phones that you see each other in. There's going to be like computers that control everything. Like they were saying that in the 80s and in the 70s. And dollar's going to crash. Guys, it's going up, and it's going up hard. And let me tell you, the dollar is the only currency that has the ability to be backed up by gold. And guess who owns pretty much twice as much of the gold than any other BRICS nation? You guessed it, the Stars and the Stripes. So there is a lot of theory on what Fort Knox is and what you think. I'm not here to talk about that, but there is a situation though where maybe that has to do with the Iraqi dinar. Of course, I'm just speculating here. Maybe they drop the US dollar, and they obviously, which would rush everybody to gold, they cash out the gold and they convert it all into a cryptocurrency and force everybody into a digital ID system. Maybe they do that. And if that's the case, gold will have a massive sell-off. The demand will be ultra high, but it'll be at a high price point where you could sell it for whatever digital system the government wants us in. But guys, this is a track trace. It is a track, trace, and control agenda. And always keep that in mind, that I'm in it with you. It will be a track, trace, and control agenda. You can't even board a flight without even not going to TSA. And they have the Real ID program where you have to biometrically sign in, throw in your straw man driver's license, and electronically, biometrically go in, or have a passport, which also has a QR code and knows everything about you on the passport side. Your information is tracked, guys. I'm sorry, it's here. There's nothing way around it. They have your eyes, they have your biometrics. I mean, I was talking to Stu the other day, and they have these smart poles, these smart cities. Basically, these smart poles basically have biometric scanners, so they know who you are within 100 feet radius. They have these frequencies that can be weaponized, loud frequencies, sound waves that literally can hurt you right in the chest, that can shock you from sound waves. They have these beams, these lighted beams that the infrared is so strong, you are forced to walk a certain way, almost like hurting a bunch of people. Think of hurting a bunch of people. If you act out of line, you're going to get sound waved on, which is a punch in the chest, basically. And you can't hide from it because the AI scanners with drones are facially recognizing your face immediately. Like, this technology is here. The government has access to it. We're seeing a little bit on the financial side, like how this works. Are they going to do a QFS? Are they going to do the Nasera, Jacera? That is all still speculation. A lot of people say that XRP is going to, back the gold, and XLM is going to back the silver, and there's like 3 or 4 other cryptos that are going to basically be pegged to the precious metals. Well, let me tell you something about the financial world, guys. Whenever the banks want to do something, they just copy it. They're not going to need Ripple technology. They already have their own technology. So I promise you, they will use their own versus paying somebody for technology. And my industry is a very big copycat industry. I've been in it for 20 years. I'm not saying everything I say is right and 100% accurate. I can only share my experience and what I see. That's up to you to decide. It's up to you to make a decision. It's up to you to give us a call. It's up to you to hire me as your advisor. It's up to you, man. All I'm saying, at the end of the day, you got to do what's right for you. There shouldn't be any fear, shouldn't be uncertainty, there shouldn't be any doubt. And if it is, it's normal. It's just you need to create plan. There's success is just preparation. Success, you feel more confident when you're prepared. Failure to plan is a plan to fail, and hope is not a plan. So we want to make sure that we fight the lack of retirement confidence with preparation. So when you're prepared, you are ultra confident. Is learn about all the risks that could happen with your retirement, with interest rate risk, with stock market risk, with banking risk, with all these risks that happen. You have the ability to just extinguish it because you are prepared. And as I go, I'm here at the house now. I want to do the first part of this podcast on camera. It's a different feel. And I want to talk about the charts. I want to pull up some articles and actually get to that. And also, November 1st is our cutoff for that 29% bonus program. For those of you that want 29% guaranteed in your account, let me tell you the caveats. You can put money in an account. You got to have $75,000 to get a 29% bonus if it's available in your state. It's not available in California after 48, and it's not available in Tennessee or Maryland. But if you're outside of those states, chances are, I got to check because it changes all the time, but you can get a 29% bonus on your money. I've had a client just roll his 401k over. He had two of them. Rolled it over, is getting a 29% bonus, signed and sealed. He has ability to add to it for 3 years and make 29% on each deposit. He agreed that he acknowledged that there's a fee. The fee is 0.95. If we go over 10%, we will pay a surrender penalty. So we don't want to go over 10%, and we don't want to put money in there that we need liquid, like to pay bills, to run a business, for your healthcare. So you need to have liquidity set aside. But also, if you let this thing cook and marinate, I wouldn't even touch it. Let it grow. It should double every 4 to 6 years. And knowing that, you'll have the ability to have an account that will grow and continue to grow. And you can utilize your deposits. You can utilize your savings, whatever automated savings you want. You can utilize to get traction in there and build a good system of wealth. And then once you're at your financial summit or you're done letting it grow, you're just pulling 5, 6, 7% withdrawals. And these accounts are going to basically average around 5 to 10%. Of course, the upside is not guaranteed. The index is not guaranteed, and past performance is not indicative of future results. You understand that jargon. And you have the ability to pull money out 10% a year. You can do it monthly, quarterly, however it is, as long as it stays under 10%. And you must understand that it has a 0.95 annual fee. That is the whole nuts and bolts and meat and potatoes of that particular account. So if you're interested, give us a call, 813-448-3446. That would be option 4. And if you need to learn more about what other options there is, you can go to greenmoneysolutions.com. Again, greenmoneysolutions.com.
Hey guys, I'm back in my studio. Are you guys smirking? Are you smirking out right now? Like, you walking around with your chest high, knowing that you're a lot more confident than you were maybe 6 months ago, maybe a year before you give us a call and actually did something. I know our clients are. As the bank failures continue and bank stresses, I don't want to say bank failures yet, but the bank stresses are coming very close. And this is not a conspiracy. This is not hype. This is not fear mongering. I'm going to show you the charts. It's the truth. And now we have articles talking about bank stresses as if it's news as if it's like fresh rumor news right out of the oven. Guys, by the time it hits the news, we want to make sure we're in a position where we're making money because we've done our research. When we do our research, we know it's going to be news before it's news. And we make our trades, we make our transactions based on the news that's to come. The news basically just fuels the growth pattern of what your bias is going to be. But I just wanted to say congratulations to everyone that's been listening to us or to my show. We've been talking about KRE, and now it hits the news. We've been talking about digital credit score. It hits the news. We've talked about so many things before it's news, and people are freaking out, texting me, calling me, saying, "Are we okay?" I'm like, brother, we've done stuff already because we knew this was coming. Like, oh, thank God. That's why I hired you, Carlos. That's why I hired you. It's up to you guys. Do you have an advisor that's in the know? Do you have an advisor that can call out shots, that can basically believe in what you believe in and quantify and qualify? Do you even know what your standard deviation is? Like many of you just have your money in the market. You don't know what the standard deviation is. And that's okay if you don't know it, but your advisor should know it. And if you call him or her and say, hey, Mr. Billy, hey, Miss Allison, I just wanted to know what my standard deviation on my whole entire portfolio was or is. And they do this, let me get back to you on that. I would be very cautious. I don't know what's worse, him not knowing off the top of his head, or B, or she, or B, maybe he doesn't care or she doesn't care. And once again, I don't know. But your standard deviation is literally the measurement of the risk you're taking in order to receive a certain rate of return. So a lot of people are just calling us all of a sudden because they know November 1st is right around the corner, and we have the ability to protect your principal now. Before things get worse, we're going to show you the charts here in a minute. We have a situation where banks are getting stresses that they haven't seen before. Currently, right now, Bank of America issues a statement. And this is not a regional. We spoke about regional banks. We spoke what regional banks are doing. And this is not conspiracy, guys. This is a real deal. Bank of America warns of forced stock selling if credit problems persist. Further signs of strain in the credit market risk, providing another broad equities route as long investors, including pension funds, will be compelled to sell, according to strategists at Bank of America. Quote, if private lending hiccups continue, pensions, etc., may be forced sellers of index funds to avoid punitive private asset marks and meet ongoing obligations, said Savita Subramanian, head of U.S. and quantitative strategy at BOA Securities. Passive investment dominates the S&P 500, so a downturn would push funds into track indices to sell equities, she said Monday, end quote. So obviously this warning comes as traders' worries are mounting that bad loans at smaller banks are posed to spill over into other corners of the stock market. An index of the regional lenders fell more than 6%. I wonder what index they're talking about. Thursday has slumped for 4 straight weeks, the longest slide of the year. Here's a diagram of bank stocks. KWB, Regional Banking Index. We'll take a look at that one real quick and how it compares to KRE. So here we go. BOA isn't only alone a warning about valuations of potential for continued selling pressures from the index tracking funds. Miller Tabak, the company's chief marketing strategist, Matt Malley, said that exchange traded funds tracking the banks could compound selling. And given that the bank ETFs has already been under some material weakness, it's not going to take much downside follow through to confirm an important change in the trend in the bank stocks, he said. amid the risk of the forced selling by pension funds. CNN urged investors to be selective. So here we are. We have bank executives already crapping bricks saying, dude, I don't know what's going on. I mean, they know what's going on. They don't know what to do. So let's go over to the charts, because at the end of the day, the charts don't lie. You know what I mean? So here we are. We have KRE. KRE has been going down, 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 down the creek since September. I'm surprised I didn't even mention KRE, because this is a terrible formation. It is sinking off. And actually, let me go on to 1 hour real quick, because just today while I'm recording it, it's still selling off. Today, I get a sell pressure, an actual official sell signal that the banks are going down. This is the index, the regionals. So it might be a good time to actually short the banks, buy a put on this. I'm going to be looking at possibly buying a put here and shorting the banks. Here we go. We have a red momentum bar that has come close to our top resistance bar. Every time it hits this second blue line here, notice how it just comes down. Hits this bar, kisses it, goes over, and comes back down. Hits this bar, comes over, comes back down. It's the second momentum bar up here. Right here, touches it, and look, just screams down. So based on the historicals, on the technical analysis, although it's not at the second bar here, we still have all the indicators that this is a sell on. Again, it's not investment advice. Don't invest in this. I'm not saying buying a put. Do not take this as investment advice, and everything on the show is not investment advice. I'm just stating information and education material that you can focus on. That's it. This is for information education purposes only. All right. So, yeah, we have a sell pressure here on the banks. And I am just like blown away, because we've been talking about KRE for how long, guys? So here's KWE, where the article refers to it. Look at that sell off pressure. Holy smokes. It was at 79 and dropped down to 74.30, shot back up to 76.70. Up, that's a 1 hour. Let's go on a daily. Look at the volatility on this puppy. It just shot up. Boom. Interest rates were making a ton of money, or helping the banks making a ton of money. Obviously, we had a bull run. And as you know, things are cooling off. Look at our top bar here. It hits the top resistance bar on a momentum oscillator. And now we are starting to see a massive, massive sell-off. When these turn red and I have that formation, I have a sell pressure box here. Just multiple indications. My background is red. Like, we could possibly just short this and make some money. Of course, this is not investment advice. Everything I say on this podcast is for information and education purposes only. But if you were to look at this with the naked eye, I think you're smart enough to tell me that this is coming down. Like, that's a pretty prominent, formation there. A setup here that we have a lot of negative pressure coming down. It's not coincidental that we have interest rates also coming down. So that's KWB, also known as KBW, the Invesco Banking Index. And how it compares to KRE, well, it looked like the same pattern. Here we are, guys. The banks are going to start doing some funny things. So obviously this affects the banking index. My question to you is, what are you going to do right now? We know the banking index is going bad. Vietnam just got 86 million bank accounts just seized by the government, because there was a track, trace, and control agenda that they want to put in America as well. And it's coming. You can't get on an airplane without scanning your eyeballs or scanning your passport. You can't even open up your iPhone without biometrics. Now Amazon is basically having your palm readings, your palm markings, in order to send in the biometrics, so they connect your Apple Pay with your Amazon. When you go to Whole Foods to shop, you're just scanning like this. This is not conspiracy. It's here. Now, speaking of the credit markets, one thing I want to talk about is the controversy of gold. As we see gold surge at parabolic levels, we get a lot of phone calls about, hey, should I be buying gold right now? Guys, we miss all of this return. It's up over 70%. But we're starting to see it cool off. We're going to see it come sell off. We hit the top bar here. And this is what I was saying on the town hall that I got some pushback. I said, look, gold's going to come down. It can't stay this high. And then next thing you know, we get a red mark here and you're still up. It's still winning. I'm not saying you're not going to win with gold. What I am saying is that it's going to come down. Maybe we sell 10 or 15% of our gold positions, even our silver. And I own precious metals too. So I'm in it with you. But it does make sense to possibly sell just 10, 15, 20% here, lock in those gains of the 60, some of you 120% gains. Lock some of that in. Leave it in cash. By the way, the US dollar, speaking of cash, you guys know what the dollar's doing? This is the whole reason why I said gold was going to come down is because look at our momentum here. I got nothing but green bars here. Our dollar is cranking right now. In the silence of everything, we've had this whole bearish run on a dollar. Everybody says the dollar is going to crash. And look, last year, it did. It completely went down. But what must come down, what goes down always comes back up. So all of summer of last year, the dollar literally just melted off the face of this planet. But it has now regained a lot of steam. So yes, the dollar has been going down, but now it's starting to take a turn up. And if I squeeze this in, you can kind of see it even better. And pay attention to the years. Remember when Joe Biden got in and everyone said the dollar was going to crash? Look what it did. It skyrocketed. Dollar futures. And then it apparently went down. I mean, we knew that was coming. Fundamentally speaking, 34 to 29.6. And then it just started creeping right back up. Melted as soon as Trump got in. Melted from July, all of summer last year. Just took a dump. And we have here in November where it just turned and it's just been going up, coming back down, and then coming back up, coming back down. And here we are again. The dollar is actually going up. The overall trend is negative. We get that. But notice when it was coming back up, we didn't really have much green bars the way we do now. We had a lot of red splattered. So that means a lot of sell signals. There's no sell signals for over 2 months now. And now we get a blue cross and green lights. We're starting to see a momentum that is completely favorable for the bullish run. So the dollar, regardless what you think, the dollar's going up. And when the dollar goes up, gold goes down. And you're like, well, what about silver? Well, it's all correlated. Let me show you. Same style of chart, just boom, massive. And then we see a little bit of a sell-off, just a hair. Just a hair. Now, this is my daily chart, which is more accurate than a 4-hour. Now, just today of this recording, we can see it closely now that we get a red box here, and it's melting down. Silver. A little resistance. People are buying. People are smart. They buy the dip. But when the institutions are involved, they will smoke these little investors. These guys are buying the dip. And we'll start to see it come down even more. Just a hair, guys. I'm not saying that silver is going to go to zero. I'm saying that we will see more sell-offs in silver. So don't buy at all-time high here. Wait for it to come down a hair. Then you can buy it. And yeah, silver is probably going to go to 100. You can't have track, trace, and control without silver, man. I really feel, this is my conspiracy theory. Call me crazy, whatever you want. But I feel like the war on Russia and Ukraine was all about the silver. That's just me. Silver is the oil. Data is new oil. Silver is new oil. They go hand in hand. Oh, and let's take a look at Bitcoin. Yep, it's getting shorted. Bitcoin is going down. We see overall trend down. We got a sell signal. Look at this trend. I mean, this looks like it's coming down. I hope it goes down. I want to pick up some more Bitcoin under 100. So I'm hoping Bitcoin goes down 100. Emotionally, I am saying that, but technical standpoint is that it could go down. We have a sell pressure signal here. We see some resistance. So we have a lot of people just buying at these newer lows. Can't lie with this formation. I got a sell bar, which is rare. I don't typically get these sell bars, only once in a while. Last time we got one, it went down just a hair, but it was wrong. It actually went up another 15%. Got a sell bar here. It was right. Sell bar there. It was right. Sell bar here. It wasn't that accurate. Bitcoin is very hard to predict, guys. All right. Sell bar here. It was accurate. Sell bar here. It was accurate. Golden cross. A little bit. Not enough for me to make a trade in it. And a sell bar here. That was accurate. A sell bar here. That was not accurate. A sell bar here. We had a death cross show up, and boom, that was accurate. So I have to take these as a point of evidence, not to formulate a bias, but to be aware that this is just one key evidence that has about 1,000 indicators built into it that the underlying value could go down. Again, this is investment. This is not investment advice. I'm not telling you to buy or short Bitcoin. What I'm telling you is education, information purposes only. So I wouldn't really touch Bitcoin personally here because I'm getting mixed signals. I'm getting some strengths on the buy side. These are all the people that are buying Bitcoin because it did melt off. So they're rushing back into it. But what we got to be careful is that we'll get another spike here and my Bollinger Band will come around here and it'll hit this Bollinger Band and boom, hit another new level. So we just got to be careful with Bitcoin because it's extremely volatile. I mean, it is very common for it to just drop 70, 80%. Well, I don't like Bitcoin, Carlos. I like XRP because of the digital reset. And the banks, banks are going to fall and they're going to have their own. Guys, I've heard every story. I've seen the charts. I've heard of every story. I got a sell bar on XRP right now. So for our XRP clients that are so bullish about it, more bullish than an Iraqi dinar, more bullish about Bitcoin, more bullish about anything, they have XRP. Guys, this is red money. You shouldn't have your retirement in red money. This is just a speculation. And you're hoping that the banks don't steal the Ripple technology and use their own because that's what banks do. And that's what I believe they're going to do. They're going to create this new XLM Stellar style system. Ripple technology. And they're going to create their own. They're going to find some loophole to make it their own. Do I think the utility is great? Yeah, I think the technology, the blockchain, absolutely. It's extremely fast. It's affordable. So yeah, we're just going to have to wait and see. But right now, it's not looking good for XRP. It looks like we're going to get some more bearish trends here. This is a bearish pattern. We'll start to see another meltdown here shortly. That's on the 4-hour. On our daily, it even looks even more accurate. Look at this sucker. It's just coming down. Coming down. And that is on a daily. Let's check our weekly. All red bars on our weekly. Holy cow. I got sell signals out the wazoo on XRP. Like I would short XRP on a weekly basis. That's how accurate this chart is. So yeah, be very careful with your emotions, guys. One thing that's not emotional is, in my opinion, have an ability to go to greenmoneysolutions.com. If you go there, you'll notice that all this is actually outside of the banking index. These are insurance-based contracts. We use high-growth fixed index annuities that are outside of stock market. So acting as an insurance advisor, I get to use the word guarantee. Now, guarantees are backed by the strength of an insurance company. So this is why we choose A-rated carriers that have been around for 100 years, that didn't vaccinate their employees, that didn't face mass face mask them or require them to wear it, and that actually are here in America and not in India or Malaysia. So when you call, you're speaking with an American and nothing else. And right now, what's really, really popular is option 4. And let me tell you a little bit about option 4, because we only have 7 days here. Now 6, because I'm recording this midday. We only have 6 more days. You need $75,000 to put into this account. Now, that can be in money in the bank. It could be an old IRA. It could be an old 401k. It could be a portion of your investment bank. It could be money in the gun safe that you need to melt and wire over. It doesn't matter what type of money it is. You just need to be able to write a check or send a wire to this A-rated carrier. I never touch your money, but you are guaranteed to get a 29% upfront bonus. There is a fee. That fee is 0.95 annually. Now, if you go over 10%, you will pay a penalty. This is for a 14-year contract. I typically don't like 14 years. However, you will make 50% off of the transition index. It's a rotator index that goes to the NASDAQ, commodities, treasuries, and the S&P 500. It blends it 60-40. It has an intraday component on it on a daily basis. There's a 60-40 rotating model, and you don't even have to manage it yourself. We have world-class money managers managing the index, and this index has performed greatly over the years. As a matter of fact, let me just show you. I'll leave this screen and go to the actual index. So if you opt to get the bonus, I'll click performance, and these are verified returns. These aren't projected returns. Look at that chart. When's the last time you had that chart with no fees and no risk? Well, option 4 is going to have fees. It has a 0.95 fee. So the earlier this year was terrible. However, it's been doing very well. The past 5 months, it's only seen one negative month of 0.55. However, I feel this index will end positive for the year. What's neat about this account is you can count the red numbers in the past 26 years. So you have 1, 2, 3, 4. Can't count this year. So we've had 4 negative years where the index lost. Again, I'll count again. 1, 2, 3, 4. 4 years out of the past 26 years where it's negative. Now, on the bonus program, going back to the bonus program, what's interesting is that on the bonus program, you're going to make about 50% of this index for, 40 to 60%. So I'll just say 50 on average, 50% participation rate of this index. So in 2023, we made close to 20%. So call it 10% would make 10.25, somewhere around there. In 2022, we had a negative year. So you made a 0. You don't lose anything. The year before that, you made 25%. So call it 12 and a half, roughly. The following year, 34 and a quarter, right? So yeah, you made half of that. And so these returns are powerful. So what I was getting at is that you can actually choose, make 100% of this index with option 3, or you can choose the bonus option, and the insurance company takes half of the growth. You still pay 1%, 0.95, I'm rounding, but you get a 29% bonus. And what you'll find is that the rate of return is going to be higher with the no fee, no bonus moving forward. However, if you're trying to retire within 5 to 6 years and you really want an account to save into, this bonus account is tremendous. 29%, and you get that for 3 years. So everything that you add for the next 3 years, you will be able to guaranteed 29% on your money. As long as you're okay with having a fee of 0.95 and making roughly 50% of those index returns I just gave you. Of course, past performance is not indicative of future results. I can only show you the historicals because those are verified returns. But if you want to a projection, then email me at info@cortezwm.com. I am more than happy to send you a projection once I ask a few questions. This is an account that will compound year by year, you'll never lose to market gains. You'll never lose to bank failures because it's not even associated with FDIC. It's not even associated with banking index. These are insurance-based companies that are outside of Wall Street, and you need a separate license to even talk about them. This is why Red Money Advisors get so pissed when I talk about this, because I get to use the word guaranteed. But with all that being said, God bless you guys. Thank you so much for your support and your donations for the actual show, Scriptures on Wall Street. God bless you guys, and I will see you soon.
Unapologetic, I won't bow, I won't hide, Latino blood.